On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again for another portfolio updates. This is our first update for the calendar year 2025. We're doing the portfolio update of the results of our investing from the month of January. Before we jump into that, I want to make sure we did the financial updates yesterday, but if you didn't get the message, you're going to get this at the beginning of every video. Got to do it real quick. First and foremost, like the video on your way in. This is your reminder. If you hate the video, dislike. If you hate watching, go ahead and pre-dislike it, because you're not going to like it, because it's going to be numbers go up. That's what we're talking about. Subscribe, because that way you can like or dislike the video more efficiently. You'll know exactly when I drop these videos. Also, down below, you'll find a bell notification. Make sure it's turned on so that way you guys can get the update. For those of you who are watching that are coming over from my Reckless Ray Dinero channel, my core channel, it's all bag talk over here. If you just want to filter through, because over there, we're going to have some things that are going to start trickling over into that realm that I'm going to start doing some uploads on that channel. But by and large, all the bag talk stuff is going to be over here. Live stream panel stuff likely going to be over there. I might hash out a live stream that's specific for this channel, but I don't know about that. I don't have time to even get my live stream going back over there to bring Guns and Butter back. We might bring Guns and Butter back. We're not bringing Guns and Butter back on this channel. It'll be over there. But we're getting ready to start getting some stuff moving. But you're going to want to be over here to get the latest and greatest as far as the bag talk goes, because it's going to be all bag talk all the time. That's our focus over here. So hit the subscribe. Also, thank you for those of you who are sharing my videos. Shout out to Dr. Quantum and Onaspot, because you both share my videos, and I appreciate that. Also, St. Elsewhere. Shout outs to St. Elsewhere. He shares the content as well. Love the support. Looking forward to adding value to you guys as you're on your journeys as well. But yeah, no, we're going to go ahead and jump right into it. I'm going to go ahead and bring to the screen and hop over to said screen, because I like to do receipts first. So as we're looking, this is the account summary. I am a Charles Schwab user. Actually, how does that come up? I never even noticed that. Yeah, whatever. That's fine. That's one way to do it. That's cool. Okay. So I might actually just relog and all that stuff over here at some point. But today we're doing it with what it is, because we got what we got. The account summary. So as we can see, let's go ahead and knock the things out of the park and get them going. First thing that we're going to notice is the account value is sitting at 35. This is collective. It's $35,533.50, of which we are really focused on, because the other one's a family fund, so I don't touch those funds no matter what. We are looking at actively, we're looking at $33,497.74. That's what I have built myself. With that, we have 3 primary portfolios, one of which we're currently filling up and getting ready to deploy. The income portfolio is the focus, which has a total of $27,346.46 in it. The long-term holdings portfolio we're at $6,025.04 in it, making some moves in there. Interesting. I'll have to see what went through on that. The options portfolio, which we're building out, this won't really start getting active until it gets to around $3,000. It is not something that I am rushing, because I am not an options trader. but we were wanting to get back into one of the communities that I do enjoy lurking in to do an experiment, but we're trying to get to $3,000 before we start that. It's going to be $3,000 to $5,000, and then we will probably not be doing content on that, but we'll get to see what's going on in there, because I made one options play in here and lost $500 of my own volition, and that was my foray into doing it myself. So we got to let the pros do what they do. It's not my lane. I thought I knew something that I didn't know and found out with $500. So there's that. But I like to give the receipts here, so that way we can look at this, and when we jump over into the breakdown, it makes a little bit more sense, and people aren't like, oh, you're making up the portfolio, because I'm not making it. I have no reason to make up the portfolio. Like, it's a dumb thing that people like to say, but people also don't give receipts, and it's a dumb thing to do, but people do it. Some of your gurus are doing it, or they don't want to give you the full scope of what's going on. And, you know, like when you look at these portfolios, because like currently my Misty's down, it's in a buy range. I've been telling people it's in a buy range. Like I'm always actively buying Misty, but like right now I'm like, yo, like this is the getting is good while the price is down. I'm also buying MSTR because the getting is good while the price is down. And we're going to go look at those holdings and what those are doing, and the reason I am in them, because now we have something to talk about, because we got about $6,000 over in this portfolio. So let's go ahead and do it. What are we looking at in here? We've got our first position that we're going to show, obviously, which is up at the top and is holding 24% of the account, is CYFRF. For those of you who are not looking at the screen, that is Sol Strategies Incorporated F. How many shares do we have of it? We got 500 shares. The current price is $297. We saw a price spike. The way that I'm doing these positions specifically is I am getting them to house money as fast as possible. So what we are doing, and like these don't have ratings, and then you'll look at the other ones that do have ratings and you'll be like, oh, your portfolio is a bunch of crap. And you know, that's one way to look at it if you don't know what you're doing, which is fine. But Sol Strategies is basically doing the same thing that MicroStrategy is doing with Solana. So it is tied to the performance of Solana. Solana is currently down, so this is taking a beating across the board. MicroStrategy, Bitcoin is down, is taking a beating across the board, which works for me because I need to get more shares. I got one more share to get our coveted 10 shares. And then we're gonna continue to have this as part of our Bitcoin standard, but we're going to be shifting over to buying MSTX shares and building up that position over the year, and then cashing them out into MicroStrategy and Bitcoin at the end of the year. That's what I've decided to do. The reason we're in this play is, those of you who are following crypto portfolio updates, the biggest percentage and highest portion of my active portfolio is Solana. So like, why would I not have that in my traditional finance portfolio for the bull run? Because I am pretty sure that I'll be able to get my 100% off this, because I've seen it hit 100% already. I was not paying attention that day. I didn't check the markets. I'm not always checking the markets. And it was probably a day that I didn't have lunch, because normally I do my trading around lunch because I have a job. So I'm at work, I take my lunch, I do my trades. So if it's a day that I didn't get lunch, I'm pretty sure it was a day that I didn't get lunch, and I was on the way back to the shop, I'm checking the prices, and it had crested 101% on this position. So normally what I do is I'll invest in something. Once it hits 100%, I will take my house money and roll that into another position. And then as we're walking away from that position, which isn't really walking away, I'll keep the house money position. So for instance, our second position, which is DEFTF, which is DeFi Technologies Incorporated, which is another crypto-based company. They do a bunch of stuff in the DeFi space, make a bunch of money, aren't appropriately valued in my opinion. And we've already hit our 100% on this position. It's 17% of the portfolio right now, because we've started sell-offs. We bought a little bit over 500 shares though. Now, with this position specifically, I still have a little bit to sell off before I hit my 250 mark of house money. The second sell-off is going to be all profit, which is going to be kind of nice. One of the things I'm looking at with this Solana, the CYFRF position, is if Solana drops low enough and this drops back down to my cost basis, I might add another 500 shares to this position. Just throwing it out there. Like, that could be in the cards, depending on how we have these dividends rolling out, because while I can't take them out of the portfolios, I can keep them as long as they're in the brokerage. We're using those to fill out positions over here. Third position, we have MSTR, which is a solid 50% of the portfolio right now. We are working towards that coveted 10 shares. And then we're going to be shifting over to MSTX for the follow-up. And then at the end of the year, we will have that position. We'll cut that position. We'll buy Bitcoin, and we will buy more MicroStrategy regular shares with that, whatever the spillover is. Last but not least, we have Palantir. We are up so much on Palantir. And like, as you can see, I forgot to mention that for those who are not watching. For the Sol Strategies Incorporated F-share positions, we are up currently $430.39. For the DeFi DEF-TF position, we are currently up $424.34 on that position. The MicroStrategy position, MSTR, we are currently up $450.42 for that position. The Palantir is closer to our buy-in rate because we are still buying that. I'm trying to get 100 shares of Palantir. That is the goal. We are currently only up $56.68 on that position, and that's actually functioning more or less like a normal stock, in my opinion. Everything else that's crypto related is functioning in crypto numbers, so I have like a higher, there's just a different level of expectation on that. The MicroStrategy is currently has an F rating, and the reason being, I wonder if they explain themselves on here. So quality grade is an F. Let's see here. The quality, and this is based on Charles Schwab. And I was talking to a friend of mine. Shout out to St. Elsewhere. I was talking to a buddy of mine who watches the show. And he was talking about, I was telling him, I was like, everywhere has a terrible rating for MicroStrategy because fair accounting was not in play. And I want to explain this before we move on because it's important. And it's one of the reasons people are like, oh, MicroStrategy is overvalued and that's why the price is going down. It's going down because the markets, the institutions don't know how to value this product. Or, I mean, this company. They don't know how to value it appropriately. There was not fair accounting laws in place for companies that held Bitcoin. MicroStrategy is the largest holder as a private equity of Bitcoin. Previous to this year, you could only report the loss in share in coin value of Bitcoin. You could not report the upside. So these companies that held Bitcoin or have held Bitcoin prior to this year only got to record Bitcoin losses. And the reason that the institutions did this was to disincentivize people from doing exactly what MicroStrategy did, which is getting into Bitcoin and front running them and everything else. Because now that BlackRock's involved in it, guess what? The accounting laws, we have fair accounting, which means you still have to account for the losses, but now you also get to account for the gains. As soon as we get the financial update for Q1 from MicroStrategy, I can almost guarantee all these ratings are going to change. But let's go through it and see what they've got. So from a growth perspective, they're giving MicroStrategy MSTR a C. The growth component, and this is their reasoning behind it. The growth component underlying the rating is based on several historical growth rates of accounting variables and the estimated growth of other items. Stocks with attributes of high profitability growth, high expected dividend growth, but lower expected sales growth tend to have better growth scores. Highly rated stocks within this category may have the potential for price appreciation as investors perceive that the growth of the potential from these base companies are more favorable. Now, that's the growth grade, which MicroStrategy MSTR got a C. Quality grade, MicroStrategy MSTR got an F. The quality component underlying the rating is based on a number of operating performance measures derived from recent financial data. Stocks with attributes such as high profitability, high earnings quality, conservative investment spending, and better operating efficiency tend to have better quality scores. Highly rated stocks within this category may have the potential for price appreciation as the investors perceive that these companies have the financial strength to potentially grow earnings faster than their peers. Again, MicroStrategy MSTR got a F in the quality grade. Sentiment grade, MicroStrategy MSTR got a D. The sentiment component underlying the rating is based on several measures of both long and short-term changes in investors' expectations. Stocks with attributes such as recently improving analyst outlooks, strong consistent price performance, and optimistic trading positions and trends tend to have better sentiment scores. Highly rated stocks within this category may have the potential for price appreciation as investors have become more aware of these companies' improving performance prospects. Again, sentiment got a D. Stability grade, MicroStrategy MSTR got a D. Let's talk about this. The stability component underlying this rating is based on several performance variability measures derived from both recent financial statements and trading data. Stocks with the attributes such as low sales volumes and low trading volumes turnovers tend to have better stability scores. Highly rated stocks within this category may have the potential for price appreciation as investors perceive that these companies deserve a premium for their steady business outcomes. Now, the stability score, I think MSTR is going to keep low on purpose because their whole game is volatility. They have the best call options banging. People are printing on it, going both ways because there's a bunch of people that are super bullish. There are a bunch of people that are super bearish that their bet is or isn't going to play out. And he wants it that way. That's the reason their bonds get the premium that they do. So he wants his stock volatile. MSTR needs to be volatile. So they're going to have a stability score that's low, and them having a low stability score makes sense because he can't make the play that he's making on Bitcoin if it's a super stable stock. Those are your boring stocks. Those are the stocks that you're not really doing call options on. You're not doing options trading with. The volatility is not there. Technically speaking, you're not going to have good, well-performing and stable high-yield ETFs based off that because the income's going to be garbage because it's going to be hard with no volatility to run call option plays. It's just what it is. The valuation grade, MSTR, got an F. The valuation component underlying the rating is based on several value-oriented investment criteria. In general, stocks with attributes such as relatively high levels of free cash flow, operating income, and expected future earnings tend to have better valuation scores. Highly rated stocks within this category may have the potential for price appreciation as investors perceive that the current stock prices of these companies are too low relative to the measure of investment value. Now, this one, they got an F, definitely should probably be a B, in my opinion, just because the play here is that the traditional finance market doesn't know how to rate crypto related companies, especially ones holding Bitcoin, because the accounting laws were wrong up until this year. Now, all of this is likely to change once MicroStrategy implements and gives us the update with the fair accounting laws on their Bitcoin holdings, because they are very, 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 I'm going to say it one more time, very in the green on that position specifically. And that's what the company is now. They're a Bitcoin holding company. So when you look at that and they implement fair accounting laws, a lot of these grades are going to change. The stability grade, I don't think that one's going to change, but I really think everything else is going to be a B or an A after we get this next update. And once they do that, there's also a really high probability that they're going to be not only be in the NASDAQ 100, they're going to be in the S&P 500 because of how much they've made holding that Bitcoin, because of price appreciation and because of their cost average. So Bitcoin is sitting at around $100,000 right now. Their average buy-in, MicroStrategy MSTR, for their Bitcoin holdings is around $40,000 per Bitcoin. And they have quite a few of them. Thousands. Lots of them. So it's going to be interesting. And then Palantir, again, we just started that position before the end of the year. We've got 3 shares. We're looking to get to 100 shares. That's going to be a slow grower. We're treating that like a normal stock. That's going to be our growth position. I think it's going to benefit under the current administration. And I like Palantir. Obviously not financial advice, but this is where my money's at. And those are my long-term holdings. So the next one that we're going to look at is the income holdings, because this is the big one. Now, as you can see, we're sitting down here. We are looking at a lot of red. A lot of red. There is a lot of red. And I'm going to say it one more time. There's a lot of red. And I know this. So you don't have to worry. I know that there's a lot of red. I keep looking at it. And, a lot of people are like, oh, I don't look at the market when it's bad. I do, because I'm looking for opportunities. I'm looking to see what I'm going to buy. So for me, this is when I go shopping. As you can see, the moves that we've made in this portfolio, and we'll go over that before we jump into the context of this. And then I'm going to have a little conversation about the context of this. Our fiat position, we pretty much dumped it. There was a little bit of dividends in there that we held on to, so I'm probably going to have to buy a share to sell all of the position. That aside, that position is going to be going away. We condensed out of that. And the reason being, I don't like hedges. I don't. And the reason I don't is because it's split focused. And if you're 100% your narrative and you're all in on your narrative, I understand that like the gurus are going to be like, oh, diversification. Like, I'm very not diversified. So like my portfolio does great or does bad based on Bitcoin. And before I had a traditional financial portfolio period, this portfolio, all of these portfolios are not even a full 12 months, really, because I used to only invest in Bitcoin and cryptocurrency. So I'm used to watching numbers change. So that doesn't affect me the same way that it affects most normal people. It doesn't make me feel bad. I don't feel any type of way about it. I'm like, cool, we're just going to keep buying, because I come from crypto where I've seen swings way worse than these regularly. One of the things to note is it's like, oh, your total gain loss is you're down 11.72%. That is not 100% accurate. We're going to talk about that in the context. But moves that we made in this portfolio, we got rid of the fiat position. We got rid of the NVIDIA position. We started a position in Maro because MARO, because that fits my narrative, and I'm kind of liking the payout on it. So we got into Maro. We might bring NVIDIA back. I don't know. We might, because like I'm looking at some split positions with every week except for Misty. And we'll see how that goes. I'm not sure yet. But we started the Maro position. We are currently at 70.89 shares. We got 30 more shares to get purchased before we hit our goal of 100 shares. And then the Maro position that week will be able to spill over into other weeks. Our Misty position is still growing. We're at 855. We're working our way to 1,200 because I do have I want a couple of hundred shares at least 100 of them, 200, at least 100 shares to where if there's a really big price move to the upside, I have something to swing trade with. That's what I'm looking at. I want 1 to 200 shares on the upside of the position that any of these positions that I'm getting in that I think there could be growth on. Whatever the target is for the position. Now, Misty is a specific one because that's my landing pad. So like our goal is to get to 1,200 shares. Considering we buy everything in Misty and at the end of the month, we redistribute into the other positions off that dividend. At a certain point, we will be well over that. And that position is just going to keep growing because Misty is the landing pad. So when we come in with W2 income, we're coming in buying Misty. Off that Misty position, whatever's left over, whatever's extra, we take a chunk of that and we're going to start putting it into the next position. So Morrow, we have set to drip right now. Like, as you can see, we got everything set to drip with the exception of Misty because that's the only one that's over. And I'm going to say at 100 shares, we can start feeding the next position because Misty will continue to feed Morrow. Then Morrow can feed into something else. And we're going to build out using a hybrid version of the wheel method because a lot of these Misty shares, we're going to be taken back. There's other positions that are within the Misty shares themselves. And I don't really need to hash those out into their own portfolios yet. So those are still building also within this position. And it's kind of nice. It's like there's like a good little mix that we got going on. Plus whatever W2 income that we put in here, that's going in there as well. As these spill out, it will feed into other positions, and those other positions obviously will feed into other positions. And then at a certain point, now we can just start massively paying off debt. And like the Misty position, we've been using that for that. Obviously, we don't have access to that again until April, and we're just going to be toughing it out until April, get a little taste of what it used to be like before we had dividends. And while we're doing that, we're going to be building up our brokerage account with those dividends and getting ready to pay taxes, which we should be getting lined out this month because I got the information that I needed from Charles Schwab, and that's going to be awesome. So I'm excited about that. YETH position, what we're using this for, and it's been a strong payer as well. I am very pleased with this position. Narrative base, it's Ethereum base, which is my second largest holding across the board. This is going to be used to also feed other positions once we get to 100 shares. It's my portfolio reinvestment funds. This is a more expensive one than what we had, which was Ulti. We condensed that down. That's also in the pool of Misty tokens now. But that portion of those tokens we are taking and we are recycling into YETH to build that position. We're currently at 31.74 shares. Once YETH gets to 100 shares, we get to deploy that into other positions within the portfolio. This month, YMAX will likely be on the chopping block. We will be converting that over into something different. I'm not liking the performance on it. It hasn't really worked out, and it's because of where I entered in. But like literally none of my YMAX positions are in the green, and the dividend kind of sucks. And considering that this is so focused and solely focused, I might add, on my crypto narrative, now that YBTC has shifted to a weekly payer, that's a better fit with my narrative. And I'd rather ride those waves and get those dividends than sit with YMAX, because the whole premise of this was I was originally going to have it in the portfolio as kind of a portfolio stabilizer, something a little slower going, something a little less aggressive, I guess, but still kind of aggressive. But I don't need that for this portfolio specifically. Like I might leave it in some of the other positions that it's in and just let it keep doing what it's doing. But the pays low It pays weekly. Sure, the shares are inexpensive, but I don't know that it's needed. Like it just doesn't make sense to me. And so I'd rather have those foundational positions be, because like I'm not going to buy the Bitcoin ETFs. I'm not going to buy into those because there's no point, because I hold Bitcoin. I'm knee deep, neck deep in crypto. That's where most of the wealth is anyway. So that doesn't benefit me, but the income does. And like those income positions in my portfolio, I would rather have them be narrative based. And then if I'm going to get something that's going to stabilize, get something like GPIQ, something like that, and have that fill in on the back end towards the end of the bull run. But I really want to maximize this bull run as much as possible. So YMAX will be coming out and getting swapped out with YBTC. That will be set on drip, and that will be the stabilizer. It'll feed itself, and I'll suss out, because I mean, versus getting however many shares, I might just buy like 3 or 4 shares or 2 shares of YBTC and just keep adding that in every month and then letting it drip and just build itself up that way. But those are the moves that we're looking at making. Now we got to jump over to the context, because this says that everybody's gonna be like, oh, Ray's losing money, what a loser. But like, honestly, total profit, and one of the reasons I like Snowball Analytics, that's what we are using for portfolio tracking here. The reason I like it is it gives you that total dividend received, and we validated this at the end of the month or end of the year with Charles Schwab. We had about 13,000, like we had 13,000 and some change. We've had 13,000 and some change. So like that actually does go in, even though we used a good chunk of that to pay off debt, and some of it got reinvested, some of it went to paying off debt. You still got paid that. So with that said, that is also a part of your profits. So I like this because it'll calculate that for me and let me know what the total profit is. Now, the thing that I wanted to talk about the caveat here is you can't 100% rely on total profit, because if you never reinvest in this style of income product, this is high yield dividend. I'm not talking about like the slow rolling stuff or dividend stocks or any of that stuff that you might get some growth. Growth is a bug, not a feature of these products. And like during certain windows of time, you can fight against NAV erosion because the underlying stock grows. Therefore, the ETF position hopefully reflects that and grows as well. But this is just about income. And so like as we scroll down here and we talk about where we're looking at these months ahead. So like the next 12 months, we're talking about an average, and this is what we're currently averaging now based off of our last updates. We're going to be averaging about 2,400 a month based on what this is projecting out based on previous payments. Now, this fluctuates every month because as you get paid, you have a great month, it kicks these numbers up. So this is the pie in the sky for me. And I cross-reference this with what Charles Schwab says, which at present is kind of weird, because towards the end of at the end of the year, when the year first started, it gave a projection of $25,000 at the start of the year. And now after the first month, it's dropped down and like it's like projecting zero. Like Charles Schwab doesn't know how to, and I'm going to guess most brokerages don't know how to average out that forward income at all. Like it's actually pretty terrible. So this is my pie in the sky. I normally look at that number, which is much lower, and kind of average it based on that. But one of the other things you can do is you can get the average based on the historical payments and do the average amount paid out total. That's also an option. And you can do that on each position and then make your own projection based off how many shares you have based on the average across the board. And then you can kind of see in the ballpark of where you're going to be. Right now, it's projecting 28,000. Obviously, we have more funds that are going to be coming into here. We've got some tactical moves that we're making to also get more stuff into here. And you know, our goal is getting to $60,000. We're 45% of the way there now. Right now, it's pushed our goal out because it used to say that I was going to make it this year. But like I said, these numbers change every single month. This is not consistent. You cannot bank on this. It's a process. And one of the things that I'll add is, at least in the way that I'm looking at it, it's a process that you are not using this as a be all end all. This is a setup. If you're just doing high yield dividends, I don't think you're going to make it. You know what I'm, yeah, like, because one of the things that you see people do is they're like, oh, well, I'm just going to match my income. And it's like, okay, but like, are you factoring in consistently reinvesting? Because one of the benefits of just putting together a pool of assets and then eating your assets and hoping that your assets keep value until you expire is, once you're done, you're just kind of done. And it's like, oh, okay, well, if I just nibble at this a little bit at a time and maybe there'll be some left over to get to the next generation, like, you don't really have to do that much work. I'm doing multiple strategies. So we have our crypto bag that we've got. So I know I'm rich off that within the next 4 years, period. But I don't want to spend it. I don't want to have to eat those assets. So what are we doing? We set up the traditional finance. How do we do that? We've got our long-term holdings where those are things that we may or may not nibble at. I'm putting a little high yield dividend in there also. And after that grows to a certain point, we'll do some less volatile stuff. This high yield dividend portfolio will also get backfed with less volatile stuff as we're building out the portfolio. We'll have we'll put some safer things that'll keep their value and appreciate a little bit to fight NAV erosion and keep the income. It's not just about hitting these numbers as fast as possible and thinking you're going to just tap out and like that's going to be the be all end all of it. What we're trying to do is put another income stream in, which, you know, $28,000 projected out really isn't that bad of an income stream. I got a solid part-time employee right now that I just got to do an hour of work a week on, if that, a couple hours a month, managing the money. But as that grows out, we're going to be able to then buy more assets, add more stable income, make sure that, like, while we've got the high volatility part, you backfeed it with the slower stuff that the regular dividend guys are talking about that's boring, because you want some sort of stability. And what we're doing is building up that baseline. It's also the same reason that I go, oh, I need 1.5 to 3 times my income before I'm going to be willing to go, you know what, like, if I was going to retire early, I'm not somebody who can sit around and not work. That's just not how I'm built. But if I want to check out or get a less paying job that has, you know, decent insurance and not be stressed out, I can do that. Like, I can go do a job that I'm interested in that might not pay as well as what I do now, because my W-2 income is just going to be feeding that high income, high yield portfolio. The excess money that I'm no longer spending then can go to building out the other portfolios. Like, it's a cycle. It's not something that I'm looking to stop. And, like, you know, like, maybe I just want to manage my portfolio because portfolio manager is a job. I can manage my own portfolio, and, like, that can be my job. I just take care and make myself richer every month. That's an option too. But again, you have to have the mindset of, like, if you're the type of person who eats every dollar and spends every dollar that comes into you, then, like, this strategy, this specific lane might not be your lane, because, like, it could be a setup for failure because of the way that people are looking at it. That's not the way that I look at it, but it's the way that I mean, I see people, like, when we're out here on Reddit, I see people on Reddit, I see people on Facebook that, like, have no clue how money works. And they're like, oh, if I was getting an extra $28,000, I'd do this. It's the same people that take out those cash advances on their credit card, which I do too, but they take it out to go buy rims, go on vacation, go do upgrades. I mean, even doing upgrades on your house that you're not going to sell for you that are ego driven. We do that different. We saved up in Bitcoin. Bitcoin blew up. We got 130 some odd percent. And now every month I'm getting an additional 2,000 that's going into that income portfolio into a separate position. And we'll use those dividends to pay for these upgrades and repairs on this house. I take cash advances to buy assets. It's just it's a different way of looking at stuff. But like, if you're not financially responsible and you're not disciplined to do that, then like, this is not the lane for you, and you need to tap in on some of the other stuff that we've got going. Find out what your lane is and use those tools. Don't use these tools. Like, this ain't for you. But because our focus is here, and like when I talk to people about the growth of the portfolio, now total growth, we're in the green. That's cool. When the assets go up in value, this number goes up because we were sitting at about 40%. We're in a dip right now. But my focus with this income portfolio is this right here. And for those of you who are not looking, it's the income over the next 12 months. I want this number going up. I want it creeping up. I want my average of this going up every month. I want to see this number increase a little bit. Because we're increasing shares, I want this number going up too. That's the focus of everything that I'm doing within that portfolio. Now, the other portfolio that we saw the great growth numbers that's just printing money, that's where I care about growth. I have a portfolio for that. I am not trying to make my income portfolio be my growth portfolio. I want my income portfolio to win at generating income. I am making more income than your favorite gurus. People are getting less income per month than I am on portfolios that are 3 and 4 times my size, and they think they're doing something. If you're playing the income game, then play the income game. We're generating income. If we're talking growth, let's talk growth. Is your guru's portfolio performing on the same level as mine? That's another conversation. Oh, well, you know, like, you got to play cycles as what they are, but it's like, as I'm growing out these positions, I can do other stuff. Like, I'm going to have 250 shares on house money. Like, cool. On the soul strategies, I'm going to have 250 shares of house money at a certain point. Cool. Actually, it might be 500 shares of house money. It just depends on what we do. If that gets back down into buy range, guess what? I'm going in for another 500 on that because I have high conviction on soul for this bull run. And if I can get another 500 shares, we might be rolling the rest of that 250 that I got on DeFi technologies to sell down to that. We might be rolling that and a little bit of dividend money into there to let it sit. Because anything that I need for a tax burden, I can get out of the dividend portfolio. It's what it is. So that's kind of how I'm looking at it. And I understand that, like I said, there's many ways to skin this cat called finance. There's so many strategies. There are so many different options that we have. And that's the reason it's almost like dieting. It's like all diets work and don't work. It depends on who it is. Like finance in general, stuff can work. If you get in on the stuff the same time that I get, you're getting the same results. But this isn't financial advice. This is a journey of me with my finances. And so far, it is work. Like, the math is the math is the math. Like, we've been doing this since 2023. This channel hasn't been around since 2023. I had to break it off of my main channel because I keep getting shadow banned on stuff over there. According to Gary Vee, it's not being shadow banned. It's just the algorithm doesn't like you. But what's funny is when I look at the viewer amounts on the videos that I release over here, when I was doing the exact same videos on my channel, nowhere near the same, because of the other content and the live panels that I do that I'm not going to stop doing on that channel because that channel's already burnt. So, like, what are we going to do about it? But over here, I'm getting more views. So, like, even though the content gurus, even though Gary Vee says that, like, that's not a thing, it's definitely a thing because I'm doing the exact same content here that I was doing over there. And maybe it was because I was doing such a wide breadth of content on that page, because I was trying to do everything that I wanted to do on that page, that the algorithm didn't know where to place me. I could give that a bit of credence. But like when I'm looking at the videos, I'm getting some videos that are getting hundreds of views. I've had a couple of videos that have almost broke 1K views, which for a micro channel with, I think we're at 52 subs now. Thank you. For those of you who have gone ahead and made the transition over here, I got 400 people on my other deal that apparently are over there for the debauchery. But getting the crowd of people that are gravitating over here and having some of my videos get picked up by the algorithm, I have never in the entire time on my other channel, which was I had 2 years in, and I'm already getting more traction on this channel that I just started with the sole focus of talking about bag talk and money, than I ever got on any video over there. And the older video, like my other videos, were good, solid video. It's the exact same content. Like I'm doing the exact same content. Matter of fact, I'm doing updates and bringing some of those older videos and just refreshing them for over here, and they're getting more views. Like I never had videos that weren't live streams that had over 100 views on my channel. I've got videos that are almost at 1,000 views on this channel. I've got videos, random ones that pop up, get 500 views, 100 and something views. I'm getting more traction over here. So like something's going on with that channel. I don't know exactly what it was, but like people were not getting the notifications. People were not being able to see the videos. So I don't know, but we just talking back talk over here. So like the algorithm can do me right instead of doing me dirty. But until next month, where we revisit this portfolio and we're going to see some more forward progress, I want you guys to make sure you have liked the video. If you hate the video, dislike the video. Also, if you want to hate watch or love watch, I prefer you love watch, but if you want to hate watch, go ahead and hit that subscribe so that you can do it more efficiently. Last but not least, hit that subscribe button and make sure to share the video, because over here in the Wolfpack, we are not trying to get rich by ourselves. That's your boy, Reckless Ray De Niro. And until next month, this has been the January 2025 portfolio update, and we are out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.